Hi, welcome to Market Alert for Wednesday, the 17th of July 2019. So, turbocharged trannies outperform as semis suffered, crude and cryptos crash. No surprise there with the cryptos. We looked at that yesterday on the 76% area of going down to 9,000. We'll look at that in more details in just a moment. But we'll start off with the Dow as usual. And in the Dow yesterday, this is the daily chart, so you can see the market sideways. It's waiting for Powell. He was speaking in Paris yesterday and hinted that there are uncertainties. And I still can't get my head around the fact that they have the lowest unemployment, so-called booming economy, the market's at the all-time highs, and they want to reduce rates. They should actually be increasing rates if everything's fine and normal, but I guess it's the sheer lunacy that we live in these days, just trying to keep the illusion alive. Actually, yesterday, talking of illusions and ignorance, yesterday in Zero Hedge, let me just find the article for you, and the headline is stunning. And here we go. Global debt hits 246 trillion, 320% of GDP. As developing debt its all-time high. So just factor that into the equation as well, and this is probably why they're looking at reducing interest rates, just to help support the printing of the debt markets. Staggering, isn't it? Huge number that, and that's without the derivatives at Deutsche Bank as well. Anyway, let's have a look at yesterday's intraday for the Dow. Not an awful lot to report, as we can see from the daily chart. The market finding support at the 200 bar moving average, moves away, then comes back and then drives through and trades down to the next psychological area. Powell opens his mouth, hints at reducing rates at the next FOMC meeting, and all of a sudden we get the market moving back to the upside, and then it just goes into a trading range. And then overnight, price is very quiet at the moment. They're all waiting for Powell to make his decision on interest rates, which I think is next week. It won't be too far off. It must be, I think it's next week. I'll check for tomorrow's alert. Meanwhile, news for today, there's only the CPI for the UK. That's all rigged from the Office of Line Statistics. We all know this, as I've said many times before, so that's the only news that's out at 9:30. Meanwhile, in the pound, I didn't bother with the pound yesterday because it's become fairly quiet, and yesterday you ignore something and it moves lower, making a new low down to the 124 area that we see here. So the pound under pressure at the moment, and again that's because the US dollar, the best of the bad currencies or global currencies, is actually moving to the upside at the moment. And in Bitcoin yesterday, we spoke about this level here, the market heading towards it. Went through the 76% yesterday, through the 10,000 level, down towards the 8,991, where we could see some sort of support coming into the market, having a shakeout at the moment. Traded up to this 76% and then traded down to this one, went back up and then came back through. So watch this level for some sort of support. We saw the 4 hour come back through the 200 bar moving average. Lovely signal here. These are the ones you want where you've got the 200 bar above the signal, and you see prices then moving back to the downside there, and the same here when it comes through as well. And in the 15-minute, we see prices going lower. They break the 200 bar moving average, and then it becomes a resistance. It just sneaks back through here, but then we see the selling coming into the market, and then it really does drive to the downside there, until eventually it finds some support as the market's tested So a good day yesterday on the downside for Bitcoin, and given that there's a correction in progress in the background, ideal. And the same here now if the market trades back up to the 200 bar and manages to trade through. Watch for it coming back to move down towards this 76% area here, 89919,000 level there. Okay, let's have a quick look at a few other things before we conclude. We've got implied volatility making an interesting picture here as well. Up again yesterday, 1129, and through the average line that I've got running through the implied volatility. And when we look at when this happens, you will see the market tends to go sideways or correct. Now you'll see each of these occasions here, fascinating to actually see. And here these are sort of preemptive of the market correcting. Doesn't mean to say it's going to crash, just means to say that it's going to be sideways or make a decent size correction. But they tend to come off the lows, which this is currently in at the moment as well, having just put in that 996. So we could be due for a correction if Powell doesn't decrease rates, which will be very interesting if he doesn't, because that will signal the market for a serious correction. And he'll probably want to avoid that, so he'll acquiesce to what Trump wants. In the yield, this is not up to date. Let me just see if I can get the one that is. There we go. The yield moving back up 0.02 yesterday, so but we're still inverted on the 3-month 10-year at the moment, so still indicating a recession coming down the line in the next 12 months or so for the global economy. It's already slowing down, has been for some time, and what you've got to remember is that they never confirm a recession until you've had 2 quarters of negative GDP, even though obviously it was already slowing down up to that point, but they won't make that call until this criteria is reached. Okay, that will do it for this one. Not a lot to report as far as news-wise. See what Trump sends out, apart from his political tweets, economic ones, and see how the market reacts. But until the Fed decide on what they're going to do, I'd expect the market to be sort of sideways to lower, unless there's something that will boost it to the upside. And with that, thanks for watching. See you in the next one.